Hello, Wolfpack. A lot of people would be wondering what's going on with the Bitcoin chart right now. And what I would say to that is that we're not bullish until 48k, as I've been saying since the 66 to 63k region. Well, I haven't been saying that since the 66 to 63k region, but what I have been saying since that region is the fact that, well, I'm selling them out of the market. And by 63k, I was completely out of the market. And now that we've pumped from 33k to 41k, people are jumping back to being bullish. And what I would say now is, like, why would I be bullish again? If I've been out of the market since 63k, why would I be bullish at 41? And what I'm seeing right now on Bitcoin is the fact that 48k is very much the critical level in terms of price. It's also the critical level in terms of dynamic support and resistance. We have the Ichimoku cloud in that region, bull market support band. We also have the VVPR showing a volume profile POC on that region. It's just actually been flipped to this region right here, just above us, but previously it was 47k. And we also have the 50-week AMA 200, the 50 AMA 200 day in that region as well. And so breaking above 48k would be a break above all of those things. And so, looking at it logically and looking at it from a logical perspective and also a non-biased perspective, because as I said, I'm completely out of the market right now. I have no money in the market at all, aside from my long-term Bitcoin holding that I hold forever. And so, when you look at it from that kind of point of view and looking at my analysis in this channel, you can understand that I'm actually probably one of the least biased analysts out here right now, because I have no personal motive or no personal bias that is kind of inflicting on my view to do technical analysis. And what I have seen on Bitcoin right now is a breakout of an RSI downtrend, which is great to see. I've also seen on Bitcoin a break out of a price downtrend, which is great to see. And I'm seeing some upwards momentum, which is great to see as well. But what I'm also seeing, given that, is the fact that, well, the upwards momentum hasn't really changed for long-term direction on Bitcoin. It's still very much downwards. We have broken the long-term direction trend line, but that was inevitable to break, right? It was very unlikely we were actually just going to go straight down to 200-week SMA without breaking that. And so now that that's broken, well, we can kind of get a bit of a point of view and start to think, well, what's going to happen next for Bitcoin here now that that line is broken? Well, I think that we've already seen what's going to happen next, right? A little bit of a pump, right? And that's great to see. But what I would say as well is that the short-term price action looked incredibly bearish. We had a very, very clear, it was exceptionally clear, ascending wedge formation on Bitcoin. And the fact that we pumped up, okay, I'm not going to draw it out now. I've drawn it out previously. But the fact that we pumped up was purely due to the fact that the job report came out in the USA. We had lower unemployment and more jobs created than ever. And you can see that the correlation between the time in which that happened, as soon as that report was released, we pumped up all the way from 37k, and within the hours we were at 42. And so, this was 100% not natural price action. It was definitely by means of not going to say manipulation, because it wasn't manipulation, but just by means of hype because of a global event that was bullish. That's good to see. Like, there's no problem with that. But I'm just saying it would have been impossible to predict, because we can't predict that kind of thing. We just can't. It's too macro. And sometimes in charting you do get those events. And it happens, like, I'd say a couple times a month, in which you literally just can't predict it. It's just too much of a macro event. Unless you have intense knowledge on that field, you don't know how the market's going to react. Even if you know the data, you still don't know how the market's going to react to it. And so, we saw that, and it was good to see. And now on Bitcoin, what we actually have a chance of doing, in my opinion, this will be the most bullish scenario, is forming an inverted head and shoulders pattern, in which we reject from here a little bit, come back down to say 40k, 39k, and then break upwards to the upside. That would be the pathway into a bullish continuation, in my opinion, on Bitcoin. I don't think the pathway that Bitcoin will have into a bullish continuation is straight up. Going straight upwards, we will just get exhausted and we'll run out of volume. We need to see a pullback to a moderate level, say 40k, and then another swing to the upside in about a week's time. So that is the scenario in which you'd be looking at for Bitcoin if you were bullish, and that is the most healthy way to break out. Now, if we do something like this and we try to keep breaking to the upside, there's multiple regions we can get rejected. In fact, we can get rejected right here at around 42.3k. We can also get rejected at 45.5k by the major resistance in that zone, and also this red line, uptrending line, and we can also get rejected at 48k. And then obviously you have to take into consideration all of these things in between that region that are potential rejection zones. And so when you look at the data from a in-depth perspective, and not just look at, wow, the short-term time frame, look, we're going up, you can see that, well, this is actually the start of a big trip to the upside that we need to be taking in order to actually see a bull market continuation, and hence I would say we're still bearish. I'm sticking by what I've said. I've been saying this for weeks and weeks and weeks, and actually months, that I think that until we break 48k, we're not bullish in the market. I don't think we're bullish at all here. And I think that any kind of buying into the market right now, unless it's scalp trading, which is okay because there has been a breakout, there has been some relief, is kind of irrational. Because, well, even on this breakout, you can see the volume hasn't been that exponentially high at all. The volume's actually been quite minuscule even on this breakout. And when you take into account, well, the volume on a breakout has been minuscule. It's like, what's going to happen in the days following? The volume's obviously going to be less than that, right? If that was a major event that led to a breakout, and the volume was basically just like at a normal average level, what's going to happen today when there's no major events leading to that further continuation to the upside? It's going to decrease in volume. We're going to see a weakness in the market. And so for that reason, I don't think that Bitcoin will be able to get over 48k. But, I honestly wouldn't be surprised if we go and test it. But it seems unlikely. It just seems unlikely to me. That said, if we do break 48k, I'm happy to buy back in, right? For sure. Happy to buy back in, happy to admit that I was wrong. And even if we break 48k, as I said, I've been out of the market since 63k. I buy back at 48. I'm still buying back 15k lower. And so I would consider that a successful prediction. But as for the actual prediction itself, and that is for prediction being, and some of you might not know this because you might be new to the channel, the prediction is being that we're going to head downwards towards the 200-week SMA, which is this green line here, and that's currently at around 19 to 20k. That prediction would be incorrect. But I mean, we've already outlined this scenario in this chart here. And this chart you guys would be familiar with by now. I talk about it quite a bit. This was kind of my two pathways to the bottom, right? This is the chart that I made quite a while ago, and it's my two pathways to the bottom. We had a descending channel on Bitcoin. We've just broken that to the upside, and so I had this yellow scenario in which we kept bouncing downwards and we reached the bottom around March, and then I had an orange scenario in which we reached the bottom between April and November. Now, the reason for April is because it's just after March, and the reason for November is because the 4-year cycle suggests November. I'm not going to go into that too in depthly, but it essentially means that. Actually, we'll look at it in a second. So my April to November is where I think the bottom's going to be now after this occurrence here. So I think that we can shift up this orange line to here. And the reason why it was there was just speculation. It didn't actually mean anything. It was just give you an idea of what would actually happen. And we can make it something like this, right? And I think that, actually, we can probably do something like this instead. Okay, I think that we'll see something like this happening. The Federal Reserve is talking on March 15th, and on March 15th, the interest rates are most likely going to be risen, and that's going to lead to a correction in the financial market, traditional markets, which would lead to a correction in Bitcoin for sure. I mean, that's like an 85% chance that that's going to happen. So, we have to take into account the macro scale here. And another thing we need to look at on the macro scale is the fact that the DXY, which is a chart that is directly correlated to Bitcoin. Now, for those of you who don't know, let's hop over to the weekly chart here. Whenever this thing is heading upwards, and this is kind of a chart that measures the strength of the US dollar in relation to other global currencies. Whenever this chart is moving upwards, Bitcoin's in a bear market. We can see it moved upwards from around 2018 all the way through to mid-2020. In May 2020, we had the halving on Bitcoin and the DXY dumped, okay? And then we reached the top on Bitcoin in the altcoin season in May, and then we had the May correction. We dropped down, and on the DXY, we went upwards. So it's very clearly correlated. If you want to go, you can go check the chart for yourself, overlay it. It's very similar charts here in terms of reverse correlation. And right now we're seeing a dump on the DXY, which has led to a pump on Bitcoin, right? It's very textbook stuff. It's really not that complicated. And looking at what we can see on the DXY, well, we can see that this is still a very much bullish chart. And there is a very strong chance that we will actually bounce here on the DXY. And as you would know, if we bounce on the DXY, that's bearish for Bitcoin. Now, we can also see this is a double bottom formation and also a cup formation. And so this chart is bullish, in my opinion. This chart is very bullish. And when you see bullish DXY, as I said, you see bearish Bitcoin. And so when this bounce does take place, it might take a few weeks to materialize. It might even take until mid-March, until that Federal Reserve talk. It might be tomorrow, who knows, when the bounce does materialize and we break over this resistance, which I think will happen, Bitcoin is going to drop further into bear market territory until this thing long-term reverses, okay? And that's just the reality of the situation. The reality of the situation is this kind of pump has been allowed by the traditional markets to happen on Bitcoin, but the traditional markets don't look bullish, don't look positive for Bitcoin in the long term, okay? The long-term direction is very much downwards for Bitcoin, in my personal opinion. And by long term, I'm referring to basically, until we reach the 200-week SMA, which could be until November or could be as soon as April. So the March prediction here, in this chart, very much invalidated by now. We've broken that channel to the upside for sure. And we need to be looking at this orange scenario taking place. Now, I am going to delete this yellow scenario here, but I am going to keep this channel in place because the channel is going to act as support in later periods, right? If we come back down and we try to break back into the channel, that's going to act as support. So let's kind of delete all this, and we can see that, well, the prediction now is this orange scenario. That is what I think is going to happen on Bitcoin. The bottom, I can't be sure where the bottom is going to be because I was sure on the yellow scenario, but right now I can't be sure on this. And we'll look at like why that is. Well, the reason why it is because this is going to take a while to get up. Because there have been correlations. I'm actually not going to do this now. Sorry, guys, it'll take too long, but I have a video on it. I'll link it in the description. The correlation between the time between bottom and top and time between bottom of top in the last 2 cycles has been very similar. It's been 1,046 days on both occurrences, and that would suggest that the top is already in. We also have 1,400 days from the bottom to bottom and bottom to bottom in both cycles, and the same thing for the top to top and top to top in both cycles, and those are both very similar time frames as well. And so all of that evidence will suggest that Bitcoin has basically topped out for the cycle and we need to be reaching a bear market bottom. Now, do I think that this bounce is abnormal? Do I think it should have happened? Well, I think that we needed a dead cat bounce. I think that we didn't really see a proper dead cat bounce, and I think that this is the dead cat bounce we were waiting to see. Now, if you look at previous cycles, all you need to do is scroll back and see that, well, dead cat bounces in previous cycles went upwards 30 to 40% at a minimum. Okay, and this dead cat bounce so far, we've gone up 30%, well, actually 25%. And so getting up to 48k would be a 50% bounce. And so that's a very considerable bounce, but still, I would remain that we're not bullish until that point. And we have seen dead cat bounces in the past that have gone up 50% and then actually continued downwards towards the 200-week SMA. I think that a lot of people, it's actually interesting to see the market right now and the sentiment in the market. It's very interesting to see. I feel like more people disagree with me on the 200-week SMA now than they did up at 60k. It's like people have gotten more and more bullish as we go further and further down, which is great to see. That's typically what you want to see in the market, but they're doing it against the logic of the TA, because in reality, further up here at 60k, when I was first calling for it at the high 50ks at least, we had a lot of support remaining in terms of bull market support, in terms of everything, Ichimoku Cloud, Gaussian channel. Now that all of that is lost, people are flipping bullish again. They're flipping bullish too early, in my opinion. I think we need to be waiting a bit more, and I think I've made that very clear in this video. So the kind of overarching point is don't get too bullish here, especially considering now we are closer to resistance than we were down at 33k. If there was a time to get bullish, it would have been at 33k because you would have had more gains to be had. But now we are very, very close to resistance. In fact, we're at the doorstep of resistance here, about 15%, 20% away from 48k. And now is the time to be being cautious. And if you've taken long positions, you need to be thinking about exiting those ones now. Don't get caught up in the hype, especially given the fact that this rally was caused by an external event, not the actual TA itself. So thanks for watching, guys. Hope you enjoyed, and I'll catch you in the next one.